Time once again for the markets. Zac Ashmore in studio with news about a bit of a correction, thanks in part to the weather. Zac?
Thanks, Mike. Some correction this week in the markets. Commodities finally showing a bit of normal ups and downs. Weather still a factor, and exports making an impact. Let's take a look. Last week's biggest gain, not lumber this time. It's finally taken a hit, soybeans. We'll get to why in a bit. Lean hogs also seeing a bump, up about 6 cents. Market analyst Elaine Kub says dry weather causing early harvest in the Corn Belt, but a bigger issue is potential frost in the north.
Some of the soybeans were so dry during August, and the plants were shutting down to a degree where it might be too late. We might certainly be seeing early harvests going on for soybeans and for corn. But at this point, look at the pod filling, there is still the chance for some of these soybean fields to continue to pod fill. But my concern going into next week is not necessarily whether or not the areas that need rain get rain, but whether the areas in the northern part of the Corn Belt get frost. I think that was maybe just not a rumor. I mean, it's part of a weather forecast that may or may not happen. But I think that was a motivator to some of the higher prices we saw here on Friday. We are going higher, and I think it's fundamentally based on these export sales that I talked about, record high soybean sales also at this time of year. And, we see that, and it may or may not be able to continue much higher than where it is right now. But it is based on fundamentals, and it's based, I mentioned in the feed grains or in the wheat, it's a lot of short covering, just removal of risk. But in the soybean market, it's fundamental commercial traders covering those export sales. That's what's moving the soybeans higher on those days that you see the double-digit higher days. And it's also the funds experiencing that story about the exports, but also the damage that we received during the dry August and the potential damage that we might receive from this frost. All of these are fundamental stories that are really legitimately pushing that soybean price higher.
In Mississippi crops, corn especially vulnerable to severe weather. With hurricane season upon us, along with harvest underway, yields could be affected by weather at the wrong place, wrong time. Dr. Eric Larson, Mississippi State Extension corn specialist, tells us more.
Well, most of the corn has now obviously reached physiological maturity. The crop in general is later than what it normally is historically. A lot of that revolves around the lack of a defined planting window during March this year, so we have a lot more April corn this year than normal. And the number one concern as far as damage potential is from the wind, from storms causing significant lodging. And obviously corn is a tall plant that has an ear, somewhere thereabouts, 4 feet off the ground, and being able to withstand those high winds is difficult for those plants, and laying the plants over may not cause a lot of issue with the grain quality, but it's certainly going to increase harvest losses and slow down the harvest progress.
On to hogs. As you saw, price rose this past week. Not sure if we're seeing a rally, but lean hog futures could hit 60 or higher. Elaine Kub says China's the reason. They're importing pork, rebuilding their own supply post-African swine fever. Grains imported too, as we've talked about before, with no signs of slowing for now.
The fundamentals behind that market is, again, it's exports, but you're seeing the cutout values, the ribs, the hams, those kind of primals are really leading, big jumps this week. So it wasn't just a fluke. It wasn't a speculative bubble. It was a real price appreciation for pork and for hogs themselves. And I think it is possible for that market to churn a little bit higher. It wouldn't have to get too much higher to hit that 60 level that you mentioned. I think a lot of the rumors out of China are the idea that they might be moving their supplies around or their stockpiles around. That food inflation is more of a factor of the pork prices, I think, still lingering from the 2019 African swine fever issue that they had there. But it's been very positive for the U.S. corn market to see export sales going to China. I mean, that has been a huge boost to corn and a big fundamental story for soybeans, of course, but also for corn. We just started a new marketing year here on September 1st, and already looking at the new crop commitments, export commitments of corn, it's at a record high level. So we have nothing but positive things to say about exports right now, and China is the big player there.
In addition, Reuters reports the rise in corn prices ruffling food security issues in China. the grain used to feed its hog, dairy, and poultry industries. With African swine fever and COVID, stocks lower, as we've said before. The result? Higher demand as China's farmers produce less grain than their country consumes, and it looks like stockpiles are almost gone, as also reported by Reuters. That would explain the buying spree in recent weeks. China wants to catch up, and with global corn output still in flux, we're sure to see prices fluctuate with those issues in mind. And that's it for a deeper look into the markets. Lots of activity, most of it weather related. Harvest time is on. We'll see how 2020's affected yields.